Hey traders, welcome to Charts and Coffee. Great to see everyone. All right, we are broadcasting on the Simpler Trading YouTube channel, my YouTube channel, and we're in the trading room. So great to see everyone. Happy Tuesday. This is a very busy week. So if you haven't caught any of the shows this week, really briefly, let me walk you through what we have going on this week. And while today is going to be kind of quiet, take a peek at what we have going on. Well, consumer confidence heads up for that today, 10 a.m. Eastern. But take a look at what we've got going on tomorrow. ADP, preliminary GDP, JOLTS, Kapow, Beige Book, right? There is hardly a significant macroeconomic pillar that we are not just hitting with a sledgehammer this week. Core PCE might be even more impactful than this week's non-farm payroll. ISM, another not necessarily CPI or PCE like inflation gauge, but that's going to be another inflation gauge. And then we go into the jobs number. PCE, as far as the hot zones that I am watching this week, that's the one that is the Federal Reserve's favorite inflation indicator, and it's also the one that could actually move the market more than jobs. All right, so with that in mind, that's what we're dealing with. Those are the hot zones at this market. The indices, treasuries, currencies, you name it, are preparing for. Oh, by the way, if that isn't enough, we do have an OPEC meeting coming up on, when the heck is that meeting? We have that coming up on was it the 2nd? We do have an OPEC meeting, I believe, on the 2nd. And we are expecting possibly a slight output increase, which for those of you that have been watching oil stocks and crude, crude has now successfully gotten down to the support, which we can arguably call not a price double bottom, but actually a double bottom based on volume, because we've actually exceeded the low. The previous time we were down here, we actually exceeded that low, and now we're looking at a volume-based double bottom on the daily time frame. Now, this move higher in crude should bode really well for the energy stock exposure we have in things like XLE, Halliburton, etc. So pretty decent week so far in terms of volatility. But let's go ahead and jump into your questions. And I'm going to toggle between TradingView here as well as the Think or Swim platform for our show this morning. All right, so next up, all right, first question is, do I trade when I'm sick? Yeah, I have. Yeah, I have. Depends on how sick I am, right? But I have traded through. I have traded when I'm sick. Yes, I know they say not to. And probably if you would have asked me 20 years ago, even 25 years ago, when I was only 5 to 10 years into my trading career, I probably would have said, no, I cannot, because I was doing so much manually back then. I was doing a lot of the calculations manually. Now that everything's automated, I know there's things that we say, we do, and there's the things that we do. I'm going to be straight up with you, Alex. Yes, I trade sick all the time. And I can, because not just the experience, because everything's automated. Yeah. I don't miss much. I just don't. I don't have to. I don't want to. And as far as I was able to push through a few weeks ago, yeah, I was really sick a few weeks ago. And I pushed through. Well, also remember, this is a really good point about trading time, Alex. It's another great, how many hours am I personally trading? Right? That's really the answer, to be quite frank. Yeah, Lorna Bot reminds me, some of you might have heard during the last webinar right before the volume decoded class. She's joking. Aside from that 10x trade in the Dow, I accidentally entered, what was it, 60 contracts in the Dow, not 6. And Yeah, so mistakes like that will happen. It was a awesome mistake, but it was a mistake. So those kinds of things will happen. But the most important thing is, Alex, is the fact that I don't trade all day long. My priority is really the first hour of the day, say 9:30 to 10:35 Eastern, first hour and 5 minutes of the day. And then I may trade to 11:30, and then I'll look at the afternoon if need be. So I'm not sitting here at the computer just trading away all day long. And so when I'm done with my morning session, if I need to, I'll go lay down or have, a fourth giant vat of coffee. These are all possibilities when you are not tethered to your desk with market orders and hyperactive trading style, which, I'm the world's most boring trader and the world's most boring day trader. So there you go. Thanks for asking, Alex. Hmm. Next question. Good morning, Jack. What is the difference between the non-farm report on Wednesday and the non-farm report on Friday? Oh, ADP versus so ADP, I mean, no offense to the folks at ADP. I'm sure they try really hard. Nobody gives a rip about the ADP non-farm payroll change. That's a private number. It doesn't necessarily reflect what we're going to see on Friday. It's just this irritating little hot zone that we have at 8:15 Eastern that sort of psychologically puts us on a countdown to the non-farm payroll. So this is simply a private number from automatic data processing. I don't really, frankly, pay any attention to it in terms of foreshadowing what we'll see on Friday. It's just a hot zone that I wouldn't ignore. I will give it its due weight, but I'm not looking for it to necessarily forecast what we're going to see because the number from ADP is nowhere near as important as the number from the Bureau of Labor Statistics, the BLS, who is the group that releases the non-farm payroll, the NFP. So private versus not, and important versus, frankly, really not that important. So that's the difference to me. Sam, good morning. What is the value area high and value area low? Are they useful in determining areas of resistance and support? So the second part of your question first, yes, they are important. But what is it? So the standard is this. There's a point of control, and then there's where did 70% of the volume take place for whatever period you're measuring. The point of control is where the most volume took place at a singular price level. The upper and lower part of it, the value area high and the value area low, is where 70% of the volume took place. And is it as powerful as point of control? No. Is it helpful? Absolutely. Absolutely. All right, next up. Happy Tuesday. Absolutely. We have thoughts on the NAS. Looks like a move to the downside is more likely. Well, if you've been following Benny, if you've been following any of the free videos that I've been doing over at the Simpler Trading YouTube channel and the Charts and Coffee Show, NASDAQ is the laggard, right? If there's a reason to move lower, and if there's an index that's likely poised to be weaker than the other two, S&P and Dow, it would be the NAS. The sectors within the NAS, the heavily weighted stocks like Apple and Microsoft, they're sort of floundering when compared to the way in which the Dow, financials, healthcare, transport, industrials are behaving. So distinct difference there from index to index and groups of sectors. That said, whether that be NAS or the S&P, both are reaching for resistance levels and are arguably near or at range highs where I would expect a little bit of fatigue. As far as fatigue and then sell off, those are two things. I'll look for fatigue. And if we have a ceiling, the ceiling itself is representative of sellers. Whether or not that ceiling of sellers then organizes into momentum sellers, that's a second step. So I agree. We're definitely looking at resistance, and there is a chance for movement to the downside. But any other week, I'd say that technicals, overbought, oversold, would have a more significant impact on what we're going to see next. But since this is a week of plenty of FOMC speak, Powell, I mean, so many different hot zones, we're going to move based on whether or not inflation is cooler or hotter than expected, whether jobs are higher or lower than expected. And that's going to be what moves us next. That's going to be what moves the target rate probabilities, what the Federal Reserve is likely to do. That's going to be where the conversation takes place. So I would not think this week is necessarily about a neutral market reaching an overbought zone. It's really what's this next bit of data indicating the Federal Reserve can or will do next. And that's where we have to compare what the driver of a day will be. Can it rely on technicals, or is it just going to be a matter of what's that next hot zone and what does it say about the economy? This week, for sure, it's the latter. This week, in terms of hot zones, are just stacked, just stacked. All right, thanks for the question, Benny. All right, next up, Pam asks, I'd like to day trade using a 1 day, 1 minute chart. I know y'all use a 5 minute chart. What is the benefit difference? One's too fast. Pam, the shortest that I go to anymore is a 2 minute. I like a 2 minute chart very much. But I find the 1 minute is too quick. And you might say, too quick? Isn't that great for day trading? No, I find it quick is just another way of saying it's too twitchy. And as far as why the 2 minute, as my mentor said, who introduced me to a 2 minute chart, it's quicker than the 3 and smarter than the 1. Try a 2 minute. You might find it's helpful, but I typically, unless the markets are in rip-roaring trends, Pam, like what we saw in 2020, 2 minute, 5 minute combo, I have found will allow me to take larger moves, will give me fewer trades, which is very important. And because I'm talking about a time frame able to be more discerning, and it's more stable. It's more stable for my purposes. So that's why I use that 5 minute chart, or maybe 2 in the case of needing something shorter. All right, next up. Hey there, Warren. I heard you say you were staying away from natty gas intraday. Yeah, Warren, it's on the do not trade list intraday. I have not seen the follow through that I need. And when my win rate for a symbol, when my win rate for a time of day, when my win rate falls below about 55%, I have to ask myself, and I need a certain sample of trades, of course. It's not 1 or 2 trades. But when my win rate through a sample of trades falls below a certain percentage, I'm not going to put my capital at risk, nor am I going to ask the traders in my rooms to do that either. And that's why things will kind of, it's no different than putting it's like putting a symbol in timeout until symbol's not doing anything wrong, but until I get a better handle on what it's doing and why it's dropped through a win rate that doesn't justify putting my money at risk. So I hope that makes sense. And I track all sorts of things with that barometer, if you will. All right, next up, good morning, David. I saw an old video of mine that used a 10-day anchored VWAP and a 1-month anchored VWAP to determine bias. Is that still something I use? I do. I don't use the 10 as much because we're in such chop. The 1 month is good. The first of the year is great. So if you want to use 2 anchored VWAPs on a daily time frame, first of the month, first of the year is great. There are some others you can use if you're looking at a stock. Going from earnings to earnings is another one. I think a lot of traders think, can I use more than 1 anchored VWAP? And the answer is yes. But in this chop, the 10 really hasn't been something I have been leaning or relying on. Thanks for the question, David. All right, next up. Good morning. Good morning. I'm going to try to pronounce your name, my friend. Belen. Tell me if I'm saying that right. I love that. Do I think that price is going to go up to $39.95 today on the SPX? Do I think it's going to happen today? I really don't know. I try not to let targets precede setups. So because of that, I know a lot of traders like to point out targets and they like to, let's just say, pretend they know where markets are going to go. Gang, I have no idea where markets are going to go, but I do know what my setups look like. So if I have, so here's all the ifs, my friend. When I start the trading session today, first of all, I don't look at the SPX and I rarely trade it. If I do, it's going to be based on what I see on the S&P futures or the ES futures contract. If I'm looking for a 39.95 target, two things I want to do. One, is that within the daily today's session volatility? Is that something that's in that 68% probability of being able to be reached in a single session? I do believe that's a yes. Okay, so then the next part is historical volatility says it's capable of getting there. What's the likelihood of it getting there? And the likelihood is, do I have a long setup to begin with, right? Is there a buy to be had? Because if I have a buy, then I can at least set up for maybe the market going to 39.95. So I have no idea if it will or not, to be straight up. And trading doesn't require that we know where a market's going. Trading only requires that we have the discipline and the knowledge, the knowledge to recognize the setups and the discipline to follow them. Then stop loss, and lastly, targets. So I hope that helps. And it's an error a lot of traders tend to make, which is a market going to go to a certain level? We shouldn't ever have to rely on that kind of insane predictive accuracy to be profitable as traders. And I hope that makes sense. It will make life a whole lot easier if we just focus on, basically leapfrogging from setup to setup and managing risk along the way. All right, next up is, do I think that, let me see. There we go. Double green on WBA. Okay. Hey there, Raphael. I'm waiting for aggro. What do I think for an aggro on Walgreens? I like the pullback. Is it likely to hit today? Probably not. Aggro would be, look, we can also consider an aggro. Here, let me pull up a couple other choices. I'm going to go right back to TradingView and pull up WBA here. And if I'm looking at WBA, I would not rule out 40 as an aggro. I would not rule out 39.20 as an aggro. The wave begins at, say, 38.70. So I don't have a problem. You've got an uptrend. Raphael, I love that. Yes, absolutely. And, gang, this is buy the dip. And from time to time, buy the dip is much maligned because most folks don't, A, know what that means, and B, don't know how to do it. Buy the dip works. Buy the dip is just another way of saying buy a retracement, buy a pullback, reversion to the mean, right? That's all that it means. But those phrases are most applicable in a trend. So our first job, and even my volume decoded class, those of you will remember, what was step number one? What is always step number one in our trading? What is the structure? And then we would move to volume, and then we move to price. By the way, when it comes to volume, Raphael, keep an eye on the mean. Not that it has been exactly where price has exhausted, but you can see right now, the mean, the anchored VWAP, that area right around $41.50 has been pretty consistent resistance. And that could be a target on the way back up after the pullback. So I hope that makes sense. All right, gang, as always, thank you so much for being a part of Charts and Coffee. And I will see you all tomorrow here at the Simpler Trading YouTube channel and my Raghee Horner YouTube channel. Same time, same station. Thanks for all the questions. Heads up this week, gang. This is a rock'em. What's that game with the robots and they're punching each other and the head pops up? Yeah, that's this week, right? That is this week. So heads up, be aware of the hot zones, keep an eye on that economic calendar, and I will see you tomorrow morning. Same rock'em sock'em robots. Yes, rock'em sock'em robots. That is what this week is. I will see you all tomorrow, 9 a.m., same time, same station. Be good to each other, gang.